Your 20s, what a decade, right? Full of change, growth, and so many opportunities. But let's be real, are you making the most of it financially? Well, today, we're going to break down a super clear step-by-step plan to help you build a seriously powerful financial future. And you can start right now. All right, let's get right to it. The big question, the one everyone's thinking. Can you actually become a crorepoti, a millionaire, while you're still in your 20s? The answer is a huge yes. And this guide? It's designed to show you exactly how to get there. So, we've broken this whole journey down into 5 simple parts. First, we're mapping out the actual path. Then we'll dig into knowing your money and cook up a formula to grow your wealth. After that, we get to the really cool part, the magic of time and patience. And to wrap it all up, we'll see how this all leads to a life that's not just rich, but balanced and fulfilling too. Okay, let's dive into step 1. The path to becoming a millionaire. And listen, this isn't some high-level theory. It's a real, practical framework that you can literally start applying to your own financial journey today. Now, to make sure this plan actually works for you, we've broken it down into 3 different versions based on your monthly salary. So whether you're just starting out around 15 to 25K or you're pulling in over a lakh, we've got a plan for you. Oh, and just so you know, to keep all our numbers realistic, we're assuming a pretty standard 10% salary bump each year. All right, we've got the framework. Now it's time for what is honestly the most important part, getting to know your money. This is the bedrock, the foundation of everything else. I mean, before you can even think about investing, you have to know where your money is actually going. And that, my friends, is all about budgeting. So the heart of our whole plan is this brilliantly simple little thing called the 50-30-20 rule. Here's how it works. The second your salary hits your account, you split it up. 50% for your needs, the absolute must-haves. 30% for your wants, because, hey, you gotta live a little, right? And the most crucial part, 20% gets put away for your future self. That's your investment money. Just look at that. It's so clear, right? Every single rupee has a job. Needs, wants, investments. But here's where it gets really interesting, seeing how this simple rule changes and adapts as your income starts to grow. So if you're in that first salary bracket, things look a little different, and that's totally okay. Essentials like rent, they just take up a bigger slice of the pie. So we've bumped needs up to 53%. But check this out. We've still carved out a healthy 27% for wants. On a 25K salary, that's still over 6,500 rupees a month to have fun. And all the while, that super important 20% for investing, it's locked in, non-negotiable. Okay, now as your income starts to climb, your strategy needs to evolve with it. We're back to that classic 50% for needs, but you'll see we've tightened up wants to 20%. So why the change? Because we're adding something absolutely essential, a 5% slice for your emergency fund. Think of this as your financial safety net. It's not optional. And don't worry about that 20% for wants. On a 75K salary, that's a cool 15,000 rupees a month just for you. And for those of you in the highest bracket, this is where the plan gets really powerful. Your needs are covered with just 45% of your income, which gives you amazing flexibility. You still get to spend 20% on your wants, that's $20,000 a month. You're building that 5% emergency fund, and you're still putting that solid 20% away to build your future. That's the dream, right? Okay, so you've got your budget on lock. You're a master. Now for the really fun part, making that money grow. In this next section, we're going to take that 20% you've been so disciplined about setting aside, and we're going to put it to work with your own personalized investment mix. Now, listen up because this is a really important point. Your investment strategy should not be static. It's not a set it and forget it forever kind of deal. As your income grows and you become more financially stable, you can afford to take on a little more calculated risk, which can lead to higher returns. The bottom line is, your plan has to grow with you. So, if you're just starting out, our focus is on a balanced, maybe slightly more conservative mix. We've got 45% in mutual funds for growth, for sure. But look, there's also a big 25% chunk in debt funds, which are generally a safer, more stable bet, and another 10% in fixed deposits. It's all about that balance between growing your money and making sure it's protected. Once you're in that middle bracket, we can get a little more assertive. You can see right away the mutual fund slice has grown to 50%. We're pulling back just a little on the more conservative stuff like FDs because now we want to capture more of that long-term growth potential the market offers. And finally, for those earning over a lakh, this portfolio is all about maximizing growth. A huge 60% is now in equity mutual funds. That means you're really leaning into the stock market. And why not? With a solid emergency fund already built up and a higher income, you can let a much bigger chunk of your investments really work hard for you over the long haul. Okay, let's just pause for a second because I want to be really clear about something. This is not a get-rich-quick scheme. It's not about gambling. This is a blueprint for disciplined, patient investing. The absolutely incredible numbers we're about to look at, they're the result of consistency and time, not luck. And that brings us to, without a doubt, the most powerful, most mind-blowing part of this entire plan, the magic of time and patience. This is the payoff. This is where we see what happens when you just stick with it and let the eighth wonder of the world, compounding, do its thing. All right, let's take someone starting out with a 25,000 rupee monthly salary following this plan to the letter. After 30 years of just being consistent, being disciplined, their projected wealth is, wait for it, a staggering 5.7 crore rupees. Okay, that's amazing. But what if you start in that middle bracket with a 75K salary? The impact of that bigger initial investment is just massive. Over the same 30 years, your projected wealth doesn't just climb, it skyrockets to an incredible 18.65 crore rupees. And for those starting at 1 lakh a month, the final result is, well, it's truly life-changing. Follow the plan for 3 decades, and that corpus is projected to grow to 28 crore rupees. That is the magic we've been talking about. This table really puts it all into perspective. Just look at the journey. After 10 years, the numbers are already fantastic. By 20 years, you're a crorepati, no matter where you started. But look at that last column. It's in that third decade, from year 20 to 30, where the growth just goes vertical. That, right there, is the awesome, undeniable power of starting early and just staying patient. So, the numbers are huge. They're exciting, but our final section is about something even more important, the philosophy behind it all. Because let's be honest, the goal isn't just to have a big number in a bank account. It's about living a life that's financially balanced and truly fulfilling. And if you take away only one thing from this, let it be this. This plan is not about sacrifice. Remember that built-in 20 to 30% for your wants? It's there for a reason. It's designed so you can actually enjoy your youth, go on that trip, buy that thing you want, completely guilt-free. All while in the background, your future self is being taken care of, quietly and consistently. It is all about balance. And we're going to end on this incredibly powerful quote from our source. The amount doesn't matter, my friend, time does. That's it. That's the secret sauce. The single most valuable asset you have right now in your 20s isn't money, it's time. The sooner you start this journey, the more powerful it will be.